All right, let's get right into it. So, you're long-term bullish on Bitcoin, but man, wouldn't it be nice if you could get some steady cash flow while you wait for the next big move? Well, if that sounds like you, then you're going to want to pay close attention. Today, we're breaking down the NEO's Bitcoin High Income ETF, ticker BTCI. It's a fund that's built to scratch that exact itch, getting paid while you hodl. I mean, think about it. For most people, Bitcoin is a buy and hold game. It just sits there in your wallet, hopefully going up in value over time. But it doesn't pay a dividend, it doesn't send you a check in the mail. This fund asks a really simple question. What if we could flip that script? What if you could turn all that potential future value into a real, recurring monthly income stream right now? So here's the game plan for today. We're going to start with the basic problem that BTCI is trying to solve. Then, we'll pop the hood and see exactly how this income engine actually works. After that, we get to the most important part, the trade-off. From there, we'll dig into the payouts and the taxes, and then we'll wrap it all up by helping you figure out if this is actually the right fit for you. All right, section 1, the big dilemma. You know, Bitcoin is an absolute powerhouse of an asset, but it's static. It's kind of like a gold bar sitting in a vault. You own it, you hold it, and you wait. So the challenge has always been, how do you take its legendary volatility and turn it into something tangible, like a monthly paycheck, without having to sell your precious coins? And this, right here, is where BTCI comes into the picture. This one sentence really tells you the whole story. It's actively managed, so there are actual people making decisions. It gets its Bitcoin exposure by buying into other Bitcoin funds. And then, here's the secret sauce. It sells call options against that exposure to generate the monthly income. And just so we're clear, this isn't some tiny, obscure fund we're talking about. We're looking at over $600 million in assets. That kind of explosive growth tells you one thing for sure. There is a huge demand for this kind of strategy. Okay, so we know what it is, but that just leads to the next big question, right? How does it actually do it? How in the world does this fund take the wild, chaotic price swings of Bitcoin and magically turn them into a check you can actually cash? Well, it's a two-step dance, and conceptually, it's pretty clever. First, the fund buys into other Bitcoin funds to get that core exposure to the price of Bitcoin. That's the foundation. Then comes step 2, the income engine. The fund systematically sells call options. Now, the simplest way to think about this is that you're essentially renting out the crazy, explosive upside potential of your Bitcoin to somebody else. And for that rental agreement, they pay you a fee, which is called a premium. The fund collects all those fees and then pays them out to you every month as a distribution. And that little explanation right there brings us to what is, without a doubt, the most critical part of this entire breakdown, the trade-off. Because let's be honest, in the world of investing, there is no such thing as a free lunch. You are always, always giving up something to get something else. So, this is the fundamental swap. This is the heart of the deal. On one side of the scale, you get that awesome potential for a monthly income stream. The whole point is to harvest Bitcoin's volatility and turn it into cash for you. But the cost? Well, the cost is that you're capping your upside. When Bitcoin goes on one of its insane face-melting rallies, this fund is absolutely designed to underperform. You have traded that moonshot potential for income today. And this quote really just hits the nail on the head. For certain investors, making this trade is a no-brainer. Maybe you're a retiree or just someone who really prioritizes that current cash flow. You're totally fine giving up a potential future home run in exchange for hitting a bunch of reliable singles today. It's a completely reasonable strategy, as long as you know exactly what you're getting into. So let's talk about when this strategy really shines. Imagine a market where Bitcoin is just kind of chopping around sideways, or maybe grinding slowly higher. This is what people in the options world call covered call heaven. In this environment, the fund just collects those option premiums month after month, pays them out to you, and you still get to participate in any of those moderate gains. It's the best case scenario. Now the flip side, what happens when we get a sharp melt up? This is where you pay the piper for that income. As Bitcoin's price just blasts off past the option strike prices, the fund's gains are capped. Now, you'll still make money, but you will absolutely get left in the dust compared to someone who's just holding a plain vanilla spot Bitcoin ETF. And I gotta say it again, this is not a flaw. This is the design. Okay, but what if Bitcoin goes into another deep crypto winter? Well, that monthly income you're getting does provide a little bit of a cushion. It can soften the blow. But let's be crystal clear about this. It does not get rid of the risk. The fund still owns Bitcoin exposure, and if Bitcoin's price gets cut in half, this fund is going down right along with it. The income helps, but it is not a parachute. All right, so let's get into the nitty-gritty of what you actually get in your pocket. This section is all about the money, the distributions, those confusing yield numbers you always see, and of course, the super important tax implications. So when you look up this fund, you're going to see two totally different yields numbers, and it's so important to know the difference. That huge distribution rate, the one that's almost 28% here, that's just a simple backward-looking number based on recent payouts. It is not a promise of future returns. The 30-day SEC yield, on the other hand, is a standardized, regulated formula, and it almost always looks way lower. The key takeaway? The big number is the marketing number. It's what happened in the past, not a guarantee for the future. Now this is a really big deal for a lot of income investors. When you look at how these payouts are classified for taxes, you see that a massive chunk of it, recently about 96%, has been called return of capital, or ROC. So what on earth is return of capital? Well, think of it as tax deferred, not tax free. Instead of you paying income tax on that distribution this year, the IRS lets you subtract that amount from what you originally paid for your shares, your cost basis. You'll pay the tax eventually when you sell, but you get to kick that can down the road. It's also important to note that because of the fund's structure, some income might be taxed as ordinary income. And the bottom line is, this tax stuff can change. You have to check the official forms yourself. Okay, so this all brings us to the final and frankly the most important section. We've seen how it works, we understand the trade-offs, we've looked at the payouts. Now, how do you know if this particular tool is the right one for your financial toolbox? This fund might be a really good fit if this sounds like you. 1. You believe in Bitcoin long-term, but your number one priority is monthly cash flow, not catching every last bit of a rally. 2. You're an income investor, maybe a retiree who wants to dip your toes into crypto. 3, you totally understand and are willing to make that trade. Less moonshot potential for a smoother ride. And finally, you like the idea of an option strategy, but you want a professional to handle all the complicated stuff for you. On the flip side, BTCI is probably not for you if your main goal is to capture 100% of Bitcoin's next insane rally. If you know you'd be kicking yourself seeing your fund lag while spot Bitcoin is going vertical, you should probably just stick with a pure spot ETF. Also, if you need your monthly payout to be rock solid and consistent, just remember, it's based on options premiums, and those can and will go up and down. And hey, it's worth pointing out that BTCI is not the only game in town anymore. There's a whole little ecosystem of these Bitcoin income ETFs now, from players like YieldMax, Roundhill, and Global X. They all have their own little quirks. YBTC from Roundhill, for instance, actually pays out weekly, which is pretty interesting. So if this whole strategy appeals to you, it's definitely worth looking at the competition. And finally, we've got to talk about the cost. The expense ratio here is 0.98%. And yeah, that is higher than a basic spot ETF that just holds Bitcoin. But you're not just buying Bitcoin exposure. You're paying for the active management of that option strategy that generates the income. That's the service this fee is covering. So when you boil it all down, what is BTCI? It's a purpose-built tool. Its one and only job is to take the inherent volatility of Bitcoin, the very thing that scares a lot of investors away, and systematically monetize it, turning into a tangible, monthly cash flow stream. It's not trying to be the best performer when Bitcoin goes to the moon, and that's okay. And that leaves us with the final question, the one that only you can answer for your own portfolio. It all comes down to this. Are you willing to trade a potential moonshot tomorrow for a paycheck today? Your answer to that question will tell you everything you need to know about whether a fund like this has a place in your strategy.